Hi, I'm TiffanyWhite with Keller Williams Realty in the Nashville Franklin office. Wanted to kind of expand on what I showed you yesterday about what makes up your mortgage payment. We looked at two scenarios where you are getting a 30-year fixed rate loan. In one case, you're putting 20% down, and in another case, just 5% down. But I wanted to show you how that might change if interest rates go up, or if prices change and perhaps prices go down, because these are some things that it kind of seems like the market is going. Interest rates are definitely on the rise and are projected to rise by all of the sources that I have read, all the mortgage lenders I've talked to, but just want to kind of give you a little comparison. So in the scenario that we looked at yesterday, we were looking at a $250,000 home purchase with, well, the first scenario was 20% down, which would be $50,000 down, and financing $200,000 at a 5% fixed interest rate for 30 years. In that situation, your PI and TI, your principal, interest, taxes, and insurance, ended up being $1,257 per month in this scenario, in this kind of example. So let's see how these numbers would change if perhaps the price on the home went down 4%. So in this case, a $250,000 house, if the price were reduced by 4%, that means the purchase price would be $240,000. So at 20% down, just to compare apples to apples, 20% down on that $240,000 house, your principal and interest would be about $1,090 per month. We're going to assume that your taxes of $100 per month and your homeowner's insurance or hazard insurance of $83 per month remains the same. But your mortgage, your purchase price was a little bit lower, which 20% down, your down payment would be about $48,000. So that would leave you financing right around $192,000. So we're assuming for this comparison that interest rates go up 0.5%. So instead of 5%, they're 5.5%. So that was the $1,090 principal and interest. And in this situation, you add this together, you end up with $1,273. So just a little bit higher. But remember, the interest rate went up and the price went down. So it's actually just a little bit more than the other scenario. So just wanted to kind of get you thinking about some of the variables. I know you may be wanting to time the market and wait until prices go down further, but keep in mind, if interest rates really do go up and they're approaching the mid or even upper fives or even close to 6%, that really could, your interest rate, it may even be more important than your purchase price or the amount you're financing, just depending on how the numbers all fall out. So, and it really just depends on your situation. If you're renting and you want to go ahead and start building equity, or maybe your lease is almost up, it may be a really good time to go ahead and start looking for a home. Of course, I suggest that you get pre-approved first, but just let me know how I can help with that process. I'm glad to put you in touch with a lender. If you know somebody who is wanting to start this process, I'm glad to reach out to them. I can set up a custom property search and keep you informed of what is on the market in the area and price range that you'd like to be. So just let me know how I can help. My name is TiffanyWhite. I'm with Keller Williams Realty in the Franklin, Nashville office. And you can reach me on my cell phone, 615-260-5858. Or if you would like to call my main office number, 615-778-1818. Thanks and have a great day.